Does my startup need D&O insurance? That's a good question. And if you're a high growth startup, then the answer is probably a big yes. And that includes tech-focused firms in software development, fintech, biotech, Web 3.0, crypto, etc. Any funded startup seriously needs to consider this protection. Why D&O insurance for startups? Well, for a few reasons. First, you're likely raising funds from family, friends, and outside investors. Those investors have expectations based on the statements you've made about your new firm. Miss those expectations and the possibility of lawsuits alleging mismanagement, miscommunications, or some other wrongful act may occur. Second, these types of lawsuits typically name the founder, owner, and other decision makers in the firm for these acts. Without D&O protection, these leaders' personal assets are at risk. Other business insurance policies don't cover these types of claims. Third, these types of claims are expensive to defend against and can easily run into six figures. Again, just for defense. Without D&O insurance, this could wipe out a company's assets and quickly bankrupt the firm. Fourth, investors aren't the only ones who bring actions against leaders. Others who commonly are plaintiffs in D&O actions include employees, creditors, competitors, and government regulators. So, what is D&O insurance? D&O is often a misunderstood form of business insurance due to its unique coverage form. In a very basic sense, D&O insurance is what I call personal net worth insurance. It protects you, your firm's leadership, and the entity from poor decision-making claims. Common allegations under a D&O claim or lawsuit are mismanagement, breach of duty, failure to comply with laws and regulations, misappropriation, etc. The crux of a D&O lawsuit is that a third party has suffered a financial harm due to your firm's leadership and they elect to take legal action. As I've mentioned, this puts your founders, officers, directors, advisors, and other company leaders at risk. D&O insurance includes the cost of defending you in a lawsuit as well, even if the grounds of that lawsuit are baseless. Many times I'll speak to a founder about D&O insurance and they'll say something like, "We'd never get sued. We're very careful about decision making, we have checks and balances in our firm, and we're very friendly with our investors." This is all true until it isn't. And when the tides turn and you get that angry, disgruntled investor lawsuit, you'll be happy you purchased D&O insurance and don't have to write a $30,000 retainer check just to respond to those allegations. What else do you need? When startups buy D&O insurance, they'll often add employment practice liability insurance, or EPLI, to their policy as well. EPLI protects the firm and its leaders from wrongful employment acts like wrongful termination, discrimination, harassment, hostile work environment. You can see more on EPLI here. Later, if the company adds a 401k plan, then I'd recommend adding fiduciary liability as well, and you can see more about fiduciary here in this video. What does D&O insurance cost for a startup? I can give you a rough estimate that most startups are paying between $5,000 to $10,000 a year for a $1 million limit of D&O insurance, slightly more when EPLI is included. Keep in mind, this is a very rough estimate. Pricing is based on several factors, like your particular industry vertical, asset size, revenue, number of employees, geography. Firms in the cannabis and crypto space will pay significantly more due to the claims experience in those industries. How do you get D&O insurance? There are two main channels to buying D&O insurance protection today. The first is working with an independent broker, like me, who represents a wide variety of D&O insurers and can help you make the best decisions based on the wide variety of choices we have access to. The second channel is working with a direct-to-consumer market, and commonly today those are tech-enabled firms that claim that they can get a policy done faster and easier for you, sometimes as fast as 5 minutes, and that's great. My concern here with the direct-to-buyer model is who's the expert helping you make that buying decision? Are you getting choices, or are you just buying that seller's one product? If you have a claim, who is your advocate going to be? And lastly, and this is a big one, several direct D&O sellers are selling a non-rated insurance company's product, meaning there's no rating agency testifying to the financial strength or ability of that insurance company to pay claims in the future. It's something that we just won't do. Yes, my opinion here is of course biased, but working with an independent broker like me usually means better results, more choices, options, and best, an expert relationship that you can rely on after the sale. To get started, let's have a conversation. My contact info is coming up, and it's also in the description box below. Thanks for watching. I hope you found value in this video.